Johan, let's talk about value and where value lies, please. And I think that's an important part to kick off our next session. Straight over to you in the interests of time.
All right, so Bruce, thank you for the intro. And the topic I would like to just maybe set the scene of is the rental administrator versus the rental asset manager. Where does the value lie? So speaking about value, let's first ask the question of make the point about property is one of the biggest asset classes in the world, estimated over $280 trillion US. With this massive of the size of this asset class, one would think or hope that the experience of the investors in this asset class would typically receive the same kind of investment experience and service that they potentially are receiving in other asset classes that they invest in as an investor. And one would, I think the important point is the responsibility as property managers managing these assets is the kind of service that these kind of clients expect from us. So if this is the global value, what does the value look like in South Africa? So first of all, there's about 18 million households in South Africa. About 3.7 million households is renting. And as alluded earlier, the economic conditions currently, and because of economical history, creates a massive demand for rental properties in South Africa. We also spoke about the generation rent, which is quite exciting for this industry. So people that would like to prefer rent and or can't buy because of the cost of buying properties. So if you look at the size of the market and you kind of estimate the rough professional fees based on the size, looking at the average rental amount currently in the country, this equates to almost 32 billion rand worth of professional fees. So the value lies globally. This is a massive investment destination for investors. From a industry perspective, there's massive value for us to unlock as an industry. And then the third point about value is most clients that's currently doing rental portfolio management predominantly have a more core business in either sales or in the community management, and rentals is kind of just the extension of their service. So the question is, what is the value to actually build or own a rental portfolio? So if we look at the, first of all, the dynamic of the rental business, it's a contract business and it creates annuity income, other than typically the sales business that most clients are doing. Because of this contract and annuity type business, it creates an immense amount of asset value for the business you're buying. Yes, sales can potentially create more cash flow, but when you have to sell your business, it's your rental book that's going to add significant value to your business. To do quick calculations again, and there's many opinions about how rental books are valued, and we're going to use the most commonly used valuation, is the average portfolio size in South Africa today is about 171 properties. Management fees ranging between 8 and 10%. Typically, we're going to take 10%. Average rental income is about 8,000 Rand. So the total rent collected by a property manager typically is then 1.3 million Rand a month. The commission is just over 130,000 Rand. And typically, the value of the rental book value is between 10 and 12 times of monthly rental collections. It then equates to 1.6 million Rand. So ladies and gentlemen, by only owning or managing a book of 171 properties, the business value that you are building is 1.6 million Rand. If you take the same cash flow from a typical sales business, you will not get close to the value of the business compared to that of the rental book. So there's value globally, there's value in South Africa, and there's value for you as business owner to invest and build this rental book. The last question about value is, how does our client, the investor, value our service? So if we think about the investor, they are ultimately trying to achieve four things. They would like, doesn't matter which investment they're investing into, they would like to optimize their return of their investment. Secondly, they ideally would like to invest into a class that, or use an asset manager that help them to reduce the risk. Thirdly, they would love guidance on how to grow their portfolio and their asset value. And lastly, they need some reporting on which they can build the decisions on for further investment. Now, if this investor typically walks into a property manager's office today sometimes we get lost in the how to than the what we do. So in most cases, property managers think when an investor walks into the office with a property to manage, that they require us to find them a tenant, collect their rent, do some maintenance management, potentially manage arrears, and do lease management. And all of those things are critical and will always be a part of our role in property management. But the needs of the investor remains. How are you going to help me build my portfolio, reduce risk, and increase my return on investment? So if we look at the typical investment experience of an investor, so we've got our investor, and he's got 2 million rand. The first million he's going to invest into a financial asset class. So he walks into any financial asset manager, and this is the typical experience he's going to have in the financial asset class as an example. Firstly, he'll be met by an asset manager. That asset manager during the first meeting is going to try to understand the client's risk profile, understand the client's expected returns, and together they'll design an investment strategy for their client. Then, typically, that client receives an investment report, providing feedback on the return on investment of the client's investment, and typically some market trends within which the client has invested in. Then annually, there'll typically be an annual review at a nice coffee shop, and again, they will decide on the investment strategy for the following year. If the same client with exactly the same needs, take his second million and he buys a property, so obviously thinking about diversification, and he walks into a property manager, typical property manager's office in South Africa, the first meeting really revolves around, I'll find you a tenant, which is a critical part of their role, but that's a kind of discussion that they're having during the first meeting. Monthly, they are sending the client distribution statements, not investment statements. They potentially are asking for more money for maintenance, and potentially there might be a discussion about late paying tenants. And annually, there's typically an annual rent escalation discussion, not an investment strategy discussion. Now, all of the things that I've just mentioned that is typically part of the property manager's role are critical, and all of them add value. But if we think back about our client, the investor, and what his core needs are, and looking how we communicate and report our value, we have to admit, as an industry, we are potentially failing to meet our clients' needs. It doesn't mean we don't have value. It doesn't mean all the things that we are doing doesn't add value. It just means how we communicate and report our value is not potentially what the client expects from us. To prove that, we did research last year and asking our clients, what are the main reasons why they lose mandates? And the results were unfortunately confirming the point we made just now. Most of our clients in the market are losing properties or mandates to their clients, the landlord themselves. And this is just confirmation that there is the value gap. The perceived value of what the property manager does, which is an immense amount of work, and there's a lot of legislation that they navigate through, is not experienced. And the main reason is that the way we package our value and communicate and report that is potentially not what the client wants. Now, with that as the baseline, I would like to invite the panel discussion, and maybe we can just have a discussion about how the clients are experiencing this in the market.
Absolutely. Thank you for that, Johan. Okay, panel, where are you? I need up now, please, Lorraine Taraga, the private investor amongst us who doesn't use outsourced management. We'll find out why in a moment. Emmanuel Germanis from Evolution Properties, Etienne Nell from Rental Asset Management. You seem to have left out a vowel there, Etienne, but I'll forgive you. And then Grant Smee, the only realty franchisor with us, and that is our panel for now. Lorraine, why do you not outsource the management of your 133 properties to another manager? Do you have nothing else to do with your life? You need a hobby.
Thanks, Bruce. I do have a lot to do with my life, actually. So I would also like to see my portfolio growing. And yeah, thanks, Johan, for that presentation. I think you've touched on a lot of points that I'm going to make this morning in terms of property management and why personally we've decided at our organization to run the properties ourselves instead of giving them to property managers. Not that we don't see the value is there, but we can add more value in terms of property management. So for example, like Johan has already spoken about, when you're speaking to a financial advisor, for an example, you see a clear picture of where your investment started, where is it going. So we're missing that gap in terms of property management. So you find that the mindset is all about the admin, which is very important. I need you to collect my rent. I need for the tenant to pay on time. Yes, but I need to see much more than that. We need to shift our mindset away from just the admin part of managing the properties and shift it to asset management, that advisory role that that the financial advisors are able to give people. We would like to see it. I mean, like, I was even thinking in my mind that maybe we should call it property management and advisory, so that, you know, we add that one piece that is missing when we talk about property management. So you talk about return on investment. So I want to know, I've got my property situated in a certain spot. Is it going to yield any results? What is happening around me? Where is that market analysis? What am I looking at? Because if I want to allow myself time to do the other things that you spoke about, Bruce, that I want to do, I don't have time to do the market management analysis myself. So I would like for my my property manager or my advisor to come to me with those things and advise me. What are the risks? Johan has touched on that as well. How do we mitigate the risks before it happens? Let's not just wait for things to happen and then we do control management. We need to fix it or do something about it before it happens. And guidance on growth. So say I want to invest in something else, some more properties. I don't have the confidence that I can go into my property manager at the moment and get that clear indication of whether it's going to yield results or my return on investment will be realized. So which means that I need to go into that exercise. I need to do it myself, and that takes up too much time. So that's why we end up having to take the whole portfolio and run with it ourselves as investors. And I think also reporting comes into play as a very important tool that maybe we underestimate. But, you know, if I've got a clear picture with a view of how am I performing, where am I going, what are the risks, where do I need to put my focus on as an investor, that is actually going to contribute a whole lot and add a whole lot of value in my life. So I think it was Pearl who spoke about the fact that clients know more than the property managers at the moment. It's because we spend more time, because we have vested interest. This is my property, this is my investment. I want to pass it on to my kids, like Opa said. So I'm going to try and look after it to the best of my ability. So when I meet a property manager, I want to get that confidence. I want to get that comfort that they are taking this as their own. This is something that they're going to look after as their own, and I will be able to pass it on still in good condition because of all these points that I've added. I know that I'm very passionate about this topic, so I'm not gonna talk too much before I take up too much of my time. But I think in a nutshell, we already know what we need to do. We already know what we need to improve on. We just need to accelerate. And I think in future, then we might be talking a different thing. And yes, investors have a lot of other things that they want to do. And I want to see myself investing more. I want to focus on building the portfolio instead of trying to make sure that the current one is surviving. So I'd rather give it to somebody else if I have the comfort, of course.
Yeah, Lorraine, look, it's massively inspiring. It really is to have a private portfolio of 133 properties with the ambition to grow for more. And I mean, universally, and I've been studying people who have built businesses and built portfolios over 30 years, and I've just watched how businesses grow and how people do it incrementally. And so many people are so apprehensive and negative about the future of South Africa, and they're going, I'm not investing in this environment. My money is going out. I'm going out. You're investing in bricks and mortar in South Africa. You can't pick it up and take it with you. And frankly, we need a lot more South Africans who are going to make that level of commitment for South Africa to work into the future. So hats off to you. Congratulations. Emmanuel, you have entered a very competitive market. You could have done anything else, I think, with your life and your career. You look like a smart young man. Why come into the space?
So, Bruce, thanks very much for having me, guys. I came from the financial services industry, actually, funny enough. And so I spent 4 years there. And after spending a lot of time there, I realized that a lot of my clients and the clients that I had been exposed to, their biggest exposures were actually real property, hard bricks. It wasn't their RAs, it wasn't their unit trusts, it wasn't their endowments or share portfolios. And having this big exposure to property, I looked at how they were being reported to. So I looked at the reports they were receiving from Allan Gray and 91 and Coro, and I looked at the property reports, and I looked at the two, and I said, well, how can somebody be reported to like this if this is their biggest investment? So that sort of stunted the eagerness to get into it. And from there, I started investigating, getting into property management. And from there, it actually led to it not becoming property management, but more asset management. And I realized that there were big gaps in the market, and becoming eager to get into property, I realized that there weren't many actually seeing it as asset management and more property management.
But that's the language, isn't it? And the language is quite important. If you're going off to somebody's party and people say, you know, so what do you do, Emmanuel? This man with a great shiny future ahead of him say, I'm in property management. People go, oh, that's nice. And they may find an excuse to go somewhere else. You know, but you go, I'm in asset management. I am an asset manager. I manage assets for a living. They go, oh, that's a different kind of discussion.
Whenever I say I'm in asset management, they always say, oh, so you actually work at Allan Gray? I'm like, no. I work for myself. I'm at Evo, and they don't believe me. But yeah, that's the hard conversation. It's actually convincing people. But I think once you explain everything, they start to realize that there's a big need for it.
Yeah, absolutely. Etienne, you've got about what, 2.6 billion rands worth of assets in your portfolio. It's a significant portfolio. Talk to me, please, about the mindset and the positioning from a rental asset management perspective that you need to embrace.
So I think, you know, the big thing about the success of moving into asset management is, you know, being static and not being able to report and manage assets proactively is something that I think the industry lacks significantly. So a lot of the companies that we've seen alongside us manage assets reactively. So that's a big thing. The big thing that we also have embedded into our business significantly is we employ specialists. We don't just employ warm bodies. So every touch point of our business has a specialist behind it, and our clients pick that up. Throughout our business, we run these properties not like homes, they're investments. So people have put money into something to see a return. So the more you run it like an investment and it yields a return, the more they want to invest in it, and the more that they want to invest in it, the bigger that their assets grow, the bigger our assets under management grow, which means that our business grows more. So I think it's a sort of domino effect in our space. Being a tech-enabled business has led to our success, and I think we've seen a lot of businesses operate manually, and I think being in an environment in today's world where you're operating manually is a static environment, and I think operating off systems that enable you to report the way that WeconnectU does, has really supported our business to report like the likes of Alan Gray 91 and become a professional body. So, you know, holistically, being a property business that can report the way we do has put us a notch above.
Okay. Thank you, Emmanuel. To Etienne, Etienne, your 2.5 billion rand property portfolio. Etienne, your 2.5 billion. That's okay. Yeah, I like your enthusiasm. I like you. I wasn't going to stop you. Etienne, talk to me about the minds. Hey, look, you take every gap that comes your way. Etienne, the mindset that you're adopting in terms of this asset management philosophy. Talk to me about that. Etienne.
I think he's got his mic off. So Etienne.
Oh, okay, Etienne. Yes, finally, we've got somebody on mute. I've been waiting all day for somebody to be on mute. Try, Etienne. I'm glad you're not a pilot. You look like a pilot, but if you were coming into land and we couldn't hear you. There we go.
There you go. My apology, Bruce. Yes, thank you very much. Bruce, yeah, running a portfolio of 2.6 billion is quite a challenging exercise. But I just want to take you back to your observation regarding the company's name. We wanted to be a little bit different. And that's why we took the vowel out of the name, and we trademarked it as RENTL, Asset Management. And we already decided as far back as during the establishment of the company that we wanted to position ourselves in the market as rental asset managers instead of rental administrators. Now, the name speaks directly to our vision and value proposition that we offer our clients. Coming back to your question about the clients as such and the experience, I think I need to go into my emails and go and see what they've all responded to, but quite often we will hear quotes like, "This is a very, very impressive report." Some will say they've never seen this before. The other will say, "At least now I know the estimated market value of my property and what the capital growth was over a period of time." And then lastly, knowing what the net operation, the operating income was during the specific financial year adds quite a lot of value. Now, Emmanuel has just mentioned he is also out of the financial industry. I also came from that sector, especially in the corporate and structured investment environment, where we do speak quite a lot with investors, and the language that you speak is very, very, very important. So we're also pleased to receive a message from an investor the other day informing us that the calculations were spot on with these projected numbers, and that we should keep basically sharing the information on an annual basis. Now, that's very important because it opens doors. Now, the view of that investor was that every single property investor, like Taraga as well, should be receiving such information to make informed decisions on his portfolio. Remember, when she is running a portfolio of 100 million, 120 units, at some stage, she must make a decision of what equity is available to use to do a gearing to buy another 10 or 15 flats in a unit. So it's very, very important information. But finally, Bruce, I must say that clients' needs and expectations surely differ. We've also received a client that says he's pretty much disappointed that his return on investment did not meet his expectations. But taking that, it opens the doors, and we can look at the other side of the coin as well. This creates an opportunity for that property manager or the asset manager to engage with that specific client regarding the net operating income, where you measure it against the cost of your investment. And by also taking all of the risk factors into account, it's a very, very, very important fact that your client needs to understand the reasons behind the numbers so that meaningful decisions can be made. Bruce, one should never forget that an investor, I think Johannes mentioned it, is a person who devotes capital to an investment in the hope that they will see return from it. So our business is basically focused on about representing the client's greatest asset to the client's greatest benefit. And I think you should know now the reason behind the name rental asset management. It's really an important game changer in the industry. Thanks,
That's
Bruce.
wonderful. Etienne, thank you very, very much. Grant Smee, you've owned and operated different kinds of businesses over many years in the property sector. Where is the real money made? On the sales side or the management side? I think you're probably best qualified to talk to us on that particular principle.
Hey, Bruce. Look, it depends who you're talking to these days and where the real money is made. But I think we, as a team and a business, have taken the view that over the long term, the real money is made in property management. The real cash flow is made, when cash flow is the lifeblood of any business. And part two, the real asset value is created for us in our business through the number of properties we manage. And obviously that comes into how many properties we can manage, how many properties we can retain over that period of time, and the value then we create for our clients on an ongoing basis.
And if you manage to go to the back of a pack of 30 cigarettes, you're going to come short quite quickly, aren't you?
Absolutely. I think, what everyone's saying here is that there's a definite need for professionalism in the industry. And I think this starts really at the baseline. And the baseline is two sides, is that a lot of people come into the industry just almost by default or accident. It's estate agents for doing sales who fall into rental, who then fall into management. They don't come from professional backgrounds such as everybody here. Everyone seems to be from a finance background. And then number two is actually the consumer. We're not talking about the consumer and the education of the consumer. A lot of people invest in property because they're told it's a great investment. But I bet if you look at 80% of guys that have actually invested in property, they haven't run the numbers, they haven't taken a look at it, and they've actually bought into hype or marketing material or anything else. And I'm not going to name them, but there's a lot of properties sold out there as investments that genuinely aren't, if you look at the real numbers.
Grant, thank you very much indeed. Johan, just wrap it up for me quickly, please, in terms of the mindset of the person who regards themselves as an asset manager versus somebody who's a rental agent and who's kind of just managing a book. Soma.
Yeah, I think, first of all, to Lorraine, we've heard from the investor that she doesn't want to deal with broken geezers, non-paying tenants, and etc. She just did it because at a certain time she decided that the value exchange was the issue. But she still have that desire of rather focusing on the investment side than the management side. I think it's really amazing to see clients like Grant, Emmanuel, and Etienne, property man saying, hey man, I can see where the missing value lies. And they are positioning themselves in that new positioning of they are asset managers and not administrators. They've got the same value. It's their communication and positioning that is critical to change the behavior of the perception of our clients, the common investor, and how they perceive us. And I think that is the critical thing. It's exciting to have this discussion, to see the mindsets changing and the realization of where the missing link is.